So is trading an art or a science? This is of course true across assets, whether it is equity, commodities or currency which you are trading. It is an art to the extent that you keep hearing that certain people have the so-called gift. And it is a science to the extent that you hear where people have certain rules by which you can go by. Now if it is an art, you already have it. But if it is a science, then it can be made in a very systematic way. So for example, you could have to start with a trading plan where you yourself carefully define what you are setting out to do. And for that, it is first important to know your entry and exit point before committing a trade. So you don't go in for an unlimited loss or an unlimited profit. You should have some targets in place before doing that. Some people even say that you could have a time limit, as in, I will not let this trade extend beyond 4 hours. If it is a futures trade, I will not extend it beyond 4 days, and no matter what the time is, I will get out. That is one way to put a limit there. Second is that the trend is your friend. This is a very popular saying and it works well. And you follow the trend, which means you get in and then you get out, and you ride the train. Now this is of course not as simple as it looks, but you can get the trend. For example, you could say that from as much as 2003 to 2007, it was one way the prices were going up as the dollar was getting devalued and commodity prices, for example, were going up and up. And another important part is patience and discipline. If you are going to be in trading or investing, then you don't want to be impatient. You want to be absolutely patient because it could take time for what you want to happen, because there are so many factors which affect each of these assets. Next, and I think very importantly, you never try to average a position. So if, for example, if you have bought something at 100 and then the price falls to 70, and then you say that, it's fallen to 70, let me buy again at 70 an equal amount so that my average price becomes 85. This is never a good idea. There is never any point throwing good money after bad. Either you should exit on a stop loss, or you wait for it. If you think it's a really good investment, then you wait for it to go above your original buying price and give you a reasonable return. Likewise, always use stop losses. Stop losses are very important. They are a part of the discipline of any trader. And if you are going to be in this market, then if I was to choose the single biggest point or takeaway from this entire screen, I would say it should be that putting stop losses on every trade. Next, do not overtrade. It is very easy to get carried away in these markets, and if you have the ability to do X amount, you can easily end up doing 2x the amount, and therefore taking much more risk than you intended to in the first place. So never overtrade. And from an investing standpoint, never be afraid of investing during bad times, because bad times is when you get the best prices. I mean, for people who invested when the markets were down, let's say about a year ago, they've waited, they've had patience and discipline, and they've taken delivery, and now the times are good, and you'll see that the prices have gone up sharply. So to sum it up in the words of Dr. Alexander Elder, successful trading depends on the 3 M's, which is mind, method, and money. Trading psychology, the trading method, money management. Which of these is more important? I mean, it's a lot like saying that which leg of a 3-legged stool is the most important. You take one away and you cannot use that stool at all. So I think the key is that whether trading and investing is an art or a science, if it is an art, you already have it inside you. What you can actually do is add the science to it, the science of patience, the science of discipline, the science of putting stop losses. And then I think this will be a very good market for you to trade and invest in.